Welcome back. Well, let's focus on one of the stocks that are getting clunked back today. That's Maharashtra Seamless. The numbers are quite disappointing. But to understand what went on, Mr. Saket Jindal, the MD of the company, joins us on the show. Hi, Mr. Jindal. Good morning and good to see you. Well, the street is clearly disappointed on the margins front. It appears that higher raw material cost has hit you and maybe some inventory loss as well. Could you tell us from this 11% margin, do you see margins recover on a blended basis? And also on an EBITDA per ton basis, the seamless vertical, well, you have the EBITDA per ton coming sub 10,000 rupees, and even some pressures what we saw on the ERW business. So guidance on both these two on the EBITDA per ton.
Right. So this quarter, there was some dip in the margins because of some 5% dip in sales, and largely due to raw material, and we had bought some higher value in March. So on an accounting basis, on FIFO basis, the accounting is showing in the increase-decrease inventory some fluctuation, which is largely causing the difference in the margin. And there's been some other expenses which are booked in this quarter, which was pertaining to earlier, and we made provision earlier. And now we have booked those expenses pertaining to earlier quarter. So this is the three reasons why there is a dip in the EBITDA. And we are hopeful that in the next quarter, definitely we will post as per earlier quarters, because our production has been consistent, and both in seamless and ERW, if you notice, our production has been consistent, not much fluctuation, maybe 4-5% maximum.
Okay.
So production is consistent, and the accounting factor has led, and raw material and all, to the dip. And we expect to post again in the next quarter as per earlier, and maintain the growth rate.
Okay. All right. So margins go back to the 19-20% that you delivered earlier. Is that correct?
Yeah, hopefully, because there is also one more factor that Chinese material has also started coming into the country. So in some sectors, not all sectors, like so that has led to more competition.
Okay.
And,
which sectors, sir? Which sectors are you seeing imports coming?
Mainly in the boiler and engineering sector.
Okay.
So we are presenting with the government to enhance the anti-dumping duties, and also to put better quality standards so that substandard material doesn't get imported into the country.
Okay. So what is your representation? How much you want them to increase the ADD to protect you?
That is still workable, because currently there's a floor price of $960 or so. So that floor price is not enough to contain the imports, and there is some unofficial imports also. So we want a better way of checking this through custom duties, which are more relevant, or which are more effective. So we are trying to work out the best solution.
Okay, you know, when you joined us last time, you told us the base case for seamless will be around 15,000 rupees per ton. And on ERW, you were guiding for a wide range of 6,000 to 11,000 rupees. What is the revised number? Because this time around, it's come in sub that 15,000 rupees, the seamless business. So you think you get back to those numbers? Seamless goes back to 15,000 and ERW will be in that vicinity of around 6,000-7,000?
Yeah, that's a reasonable figure, and we want to come back to that figure. And I believe that's a reasonable figure.
Okay, you know what's supporting you, sir, is your cash in books. And in the past, there have been, you have given some hefty dividends at times. Now, since the stock price has come off, my director pulls up the chart, the stock price had gone to 1,000 rupees and it's corrected from there. So two-part question. One is, at times you have come and you have bought from the open market. Do you think you'll be looking to do the same at current prices? And point number two, how do you want to deploy this 2,000 crores of cash?
Right. So some consolidation in holding can happen. That is part of our strategy. And second is the extra cash, which you're mentioning. We will definitely deploy them. And we have two projects in hand. One is a premium connection project for high pressure applications in the oil and gas sector, in ONGC and all. And the second is cold drawn project, which is again a value-added product for heat exchangers and other boiler applications, which also uses our mother pipe, the hot fill pipe, and the hot finish pipe is used to make the cold drawn.
No, so I didn't get that. The consolidation of holding will be you could be looking at buying some shares from the open market. Is that what you're hinting at?
Yeah, some creeping acquisition gradually,
Okay.
not so much significant.
Got it. We have your order book, sir. That's roughly around 1,800 crores or thereabouts in terms of your order book. How much of it is exports?
Yeah, so exports have dipped in the last 1 year. Earlier, it used to be 25-30%. And currently, it's dipped to, I believe, less than 10%. So the reason is, again, the international geopolitics, where, in US and Canada, there is more competition from other countries. And even Ukraine and Southeast countries have started exporting to US and Canada because of the geopolitics and the difference in demand supply. So it is stiff competition, and we expect it to ease out in the future.
Okay, all right. Final question. Volumes last year on the seamless side, you did around 400,000. On the ERW, you did around 100,000. So for this year, you're saying volumes will be more or less constant or flattish. So no big growth in both these two numbers for this year. The growth comes in FY26. Is that correct?
In the production volume?
Yes.
Right. So we expect to maintain consistency this year.
Okay, all right. Mr. Jindal, thanks a lot for joining in. So we look forward to this guidance that you've given us. Flattish volumes, but you expect margins to go back towards that 19 to 20% and maybe some kind of support on the price, given that you have cash in the books, as well as you could consolidate your holding as well.
Okay, that's Maharashtra Seamless. By the